Well, it's good to have you with us. And obviously, a lot of investors are very curious at a time when there's what feels like increasing economic uncertainty and calls for interest rates to come down, that you have seen record levels for stocks in North America. Our TSX, as we mentioned, once again positive on this Monday. We're coming off about 6 weeks of gains and a couple of record closing levels. And while the S&P is dipping this morning, it's coming off its best week of the year. And we've talked endlessly about these record highs. So how should investors think about their portfolios at this stage of the market rally? Let's check in with Neela White. She's a senior portfolio manager at Blue Wing Advisory Group with Raymond James. Nice to see you.
Glad to be here, John.
What's the most common question you've been getting from investors watching these charts steadily move higher?
I think what we're seeing a lot of is a lot of FOMO. You know, should I be here? Should I be there? And I think people are forgetting what's the core of investing. You know, eventually when interest rates do pull back, maybe towards the end of the year, what could possibly move up? Where do we need to be for growth, stability of income, all those core themes, not all just the exciting stuff that we've been seeing.
Yeah, and I mean, certainly a lot of the excitement was in technology, but I guess this bigger theme that we're now seeing, which has helped the TSX get to record levels, is a broadening out of enthusiasm for equities. What have you made of that? The fact that investors are not just willing to dip their toe into tech, but also to start looking at some of the other sectors.
You know what? I think my hope would be that people are seeing the idea of
like a soft landing, maybe, or not a worst case scenario for the economy?
Yeah, and I think that's it, just because of the language that we've been hearing, all the data we were waiting for last week. I think maybe there's a bit more feeling of optimism that rates later in the year would be cut, which means, you know, the consumer itself is less focused on where is my discretionary spending going. Mortgage rates become a little more affordable, you know, from a Canadian point of view, a bit more extra spending money, but I think still looking for value.
Yeah, and at the same time, investing can be I suppose, a short game for some people, but it is also a long game, I would say, for the majority of people. They are making these investments for the long-term performance. So does a market rally that's initially sparked by like AI, but now investors starting to look at these other sectors, do you see opportunity in those other parts of the economy that maybe have been a little bit less talked about?
Absolutely. You know, I think certainly our dividend players on the Canadian side have been really beaten down. We've seen interest rates move up. There's been a good sell-off, and I think those are good places to start when you're building a portfolio. And
you know, is there a recipe there? Like, do you think I go to this sector, or do you always start with, you know, let's look at individual companies, individual businesses, do the analysis there?
I think part and parcel, look at individual names within sectors that we like, sectors that have a history of solid dividend growth, stable balance sheets that respond well in most markets, and just adding a little torque on the side.
Okay. All right. Well, let's go through a few different ideas. You have some Canadian ones. There's a bit of a retail bent to two of your names in Dollarama. It's a name everybody knows. Yeah.
Yes.
And Alimentation Couche-Tard, which is a convenience store and gas station juggernaut, which actually had a message to investors recently saying that consumers are a little bit more cautious with their cash, so that's something that they have to navigate. But is an environment where people are truly just watching their pennies a little bit more? Do you think that's the kind of thing that plays into Alimentation Couche-Tard and Dollarama being winners?
You know, absolutely. From Dollarama's point of view, I think, you know, whether the economy is tightening and we have less sort of funds to play with and stuff like that, you know, it's a place that you can go and still have a wide selection of food, seasonal things, apparel, holiday stuff, when you're on a tight budget, whether it's fixed income or just watching your pennies. So I think those will always have higher footprints.
I always get sucked into a Dollarama, I have to say. Just, I don't know, I walk out with like, Yeah, and all sorts of goodies. Okay, so that's the Dollarama story. And then what about Alimentation Couche-Tard by comparison?
Yeah, they had a revenue miss last week, which, has affected the stock. But, when you look at the growth of the stock, it might offer a good spot to get in. They're certainly doing stuff on the consumer side to increase the loyalty program, their fuel day savings. And, a couple interesting things. They have a partnership with Warner Brothers and Legendary Pictures for the Godzilla Kong movie, and they're branding some cups, some drinks, and they're even offering breakfast of double cheese and triple meat called the Kong breakfast.
Wow.
So I think innovation is a big thing as well.
Okay, yeah, there you go. And right. Back in the day, it used to be McDonald's that was cutting those deals with the Hollywood studios. Now you can do it at your local convenience store. And then another Canadian name that you like is in the utility sector. It's Fortis. It's not just an operator in Canada, but they are definitely in the power business, and it's a business that you like. Yeah,
it's had 50 years of dividend increases. We're still looking at a yield of just over 4%. And I do think if there is a pullback on interest rates, you're going to see some loft in the stock. I think it forms a really good part of a core portfolio, a bit of a sleep at night stock. And when I look at it just from an ESG perspective as well, like 58% of its board are females. And I think, when we start looking at names, we're looking at, how have they changed and adapted?
Yeah, obviously big questions that a lot of people have for companies going forward as well. Neela, good to see you. Thanks for the breakdown as always.
Thank you very much.
You gonna try that sandwich? That seems a little heavy to me to try the double meat and cheese thing. I don't know if I can stomach it.
That'll have to be when no one's looking.
Okay, all right. Well, maybe we'll try it together. Neela, thanks.